Hi everyone, hope you guys are all having a great day today. Today's video, I'm going to be covering the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly recommend you to double check my latest videos on X or YouTube for the most up-to-date information. First, I'm going to cover the economic calendar before I cover the movement of the market in terms of support and resistance and so on and so forth. So for Thursday, June 27th at 8:30 a.m., we have initial jobless claims, GDP second revision, durable goods orders, durable goods minus transportation, and then at 10 a.m. we have pending home sales. Now, the one thing that's the most important for this week, which will be the day after, so for Friday, June 28th, we have PCE numbers, which is inflation numbers, which the Fed highly regards these inflation numbers as more accurate versus the CPI and PPI inflation numbers. Again, this is important because the market is hoping for one interest rate cut this year. And if inflation comes in worse than expected, so inflation is increasing, then it's less likely that the Fed will cut interest rates this year. And then if it comes in better than expected, then it kind of reaffirms that potentially there is a good chance that the Fed could cut interest rates. Again, the narrative for the market, for the Fed, is that they're assessing it when the data comes in more and more. And they did state that it was going to be a little bit more of a delay, but we'll see. Now, one thing in terms of the markets that I want to mention too, also the VIX is low, which is kind of surprising because the indications is kind of showing to the downside, especially the fact that for Thursday trading day, June 27th, at the end of the day, I'm expecting the markets to come down a little bit for anticipation for the PCE inflation numbers. And then the 10-year treasury is kind of going up. So going up kind of does make sense for the market to go down, but the VIX being low, it kind of doesn't show that there's indication of a pull down, which is kind of strange. But the reason why I'm, in my opinion, by the way, this is all just my opinion. Please do your own due diligence and research before buying and selling. But the reason why I think the market's going to be going down, regardless of the fact that the inflation numbers will be coming out, is if you look at the MACD line. So this indicates if it's a bearish or bullish movement. 1 month chart, this is the S&P 500, so SPY ETF, which is reflection of the S&P 500. The 1 month chart is in the bearish movement. You can see right here with the MACD line. The 3 month chart in the bearish movement as well with the MACD line, and the 6 month chart crossing over potentially to the bearish movement, and then the 1 year chart crossed over to the bearish movement already. So these MACD lines, they don't hold true 100% because they could be dictated by, for example, major moves by the mega caps. But given the nature of tomorrow with the PCE numbers coming out the day after, I think that the markets will be a little bit worrisome in a way, hypothetically, especially towards the end of trading day. It could go up in the beginning of the party day, which I kind of doubt it, but midday for sure it could probably go up. But by the end of the day, in my opinion, I think it'll be going down. Now, this is QQQ, which is an ETF for the Nasdaq, and it's the same representation. 1 month MACD line down, bearish movement. 3 month as well, bearish movement. 6 month about to cross into bearish movement, which is the same as the S&P 500 showed. And then the 1 year, it crossed over to the bearish movement. And then for the Dow Jones is basically almost the same thing, but it's a little bit of a slowdown. So for the 1 month, it's still in the bullish movement, but it looks like it might cross over to the bearish movement potentially. And then the 3 month chart is in the bearish movement, potentially arching down a little bit lower to the downside. And then 6 month chart in the bearish movement could cross over to the bullish, but it's not that close. And then the 1 year chart, it's arching down potentially to the downside. Now, it could be held up by the moving averages here colliding, which is right now we close at 39,127 points, and then maybe potentially bounce off the 38,796 points, give or take, but we'll see. But first I'm going to go over the SPY, then which is the S&P 500, then QQQ, then Dow Jones. So first for the SPY, we'll zoom in. Now for the downside, technically it shouldn't be major moves, but I think for the most part will be held by this moving average. Right now we're at $545.51 for the SPY, again ETF for S&P 500, and to the downside we could be held by this moving average right here at $542.37. If we do drop, it would be potentially a pretty decent drop. We could go down to essentially 539, but there's only one touch point there, but it would be ultimately basically a bunch of levels. So the first level would be 541, and then the 540, then 539 and 538 and some change. But I don't think we'll go lower than 538 and some change. The only problem is these levels are not specifically perfect because they're only one touch point. That's the only issue. We could probably go down to yeah, I don't know. These lower levels, for example, in terms of moving average, which would be colliding with the resistance level that could act as support potentially, it's essentially after the PCE numbers if they're bad. The thing is though, with the inflation numbers, the way they're coming in is essentially if it's a little bit worse than expected, the market's fine with it. If it's better than expected, obviously the market's okay with it, and it never comes in worse than expected, like a significant amount. So I'm not expecting any major pull downs. I'm expecting just more of a pull down leading up to the inflation numbers, and then once the inflation numbers come out, then the market will go up to the upside in a way, if that makes sense. So those are levels for the SPY in terms of the downside. Now, if you're optimistic it's going to go to the upside, there is a potential. First level we need to break essentially is horizontally with this, which is consolidation with the resistance levels a little bit. So we kind of see a little bit of a spike resistance here, but not really. One touch point here and then consolidating a bunch right here. And that's basically resistance at roughly, give or take, about the $546, $547 for the most part. Then the next level is about 548, and then going past the all-time high of 550 and some change on the high end, $550.87, let's say, for example. That's for SPY. Now for QQQ, this moving average definitely will hold, it seems like, for the most part, because it's pretty much collides with this within the zone. But anything's possible because, again, leading up to the PCE, what could happen most likely is this line. I'm going to show the significance of this line, but it could get down to this line for sure, I guess. So I should probably retract what I stated earlier, because again, the PCE numbers is important. So maybe leading up to it at the end of the trading day, it could last 15 minutes of last 15 minutes of the trading day, we could just pretty much drop significantly potentially. So the first support level is about $476 and some change. Right now we're at $480.37. Then the next level of support, potentially we see two drops right about here. So we're looking at, for the most part, $474. And then there is support right about here, $473 and some change. But I think the last 15 minutes, yeah, it could potentially drop down to this level. Now, the significance of this line right here, this dates back since 2010. So it's an upward trend resistance line that we've seen multiple touch points, like all the way since through 2010. But then 2020 to 2022, we see three touch points actually as support. So it's potentially could act as support. And then as of recent March 2024, we hit it as a resistance, and then we passed through it. But when we passed through it, by the way, just for the new viewers, we consolidated during after hours and pre-market, and then spiked up. I believe inflation numbers came out during this day. I can't remember exactly. So broke through completely. And if we were to come back down to this level and potentially bounce off as support, it's at $471 and some change, give or take. Now that's for the downside. For the upside, we have resistance at the 482 and some change. Then the next level, it could bounce. I don't know. The problem is this would be more of a support that could act as a resistance, so 484. But ultimately, this level right here. So I'm going to zoom in just a little bit more and then just draw it out. There's about 3 touch points, technically 4 if you count this little nudge right here. So 1, 2, 3, 4. And that's roughly, give or take, about $486 and some change on the high end. So 487 basically. And then the all-time high, which was during pre-market though. So I don't know if you want to count it, but if you do, 488 and some change on the high end somewhat. So that's the resistance levels. Now for the Dow Jones has a channel dating back since 2021, right about here, and then 2024 of April, it acted. There was upward trend support level as well. So within this channel, seems to be holding true for the most part. Indication is a little bit to the downside. We are at 39,127 points, give or take. We could see support at the 38,800 points, give or take, for the most part, or drop down to the right about here, this level. So 38,400 and 38,500 points that I've shown before in the past. So there is support quite a bit there, and then ultimately come down to this upward trend support level if you think it's going to hold true and be seen tomorrow, which I don't think it will, because for the Dow Jones, it seems like it's more slight drops in consolidation. But if you think we're going to see it, you're looking at 38,200 points, give or take. Now to the upside of resistance level, we have resistance at the 39,500, 39,600 points. And then the next level is pretty much about, so I'll just draw it out just in case. It's basically between these points right about here. So we're seeing about support about 39,900 points. And then the next level after that is about 40,050 points. And then because that's based off like the actual highs of the Dow Jones right about here with the 2 touch points. It only has 2 touch points though, so I don't know if it will hold true 100%. And if you think this upward trend resistance line dating back since 2021 is going to hold true, then you're looking at resistance at 40,230 points, give or take. Yeah, that's basically it for today's video. If you found it helpful, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it, and I do post these videos daily. If you consider subscribing, thanks again for the awesome support. Appreciate it on X and YouTube. Thanks again for watching. I'll see you guys in the next one. Peace.